Insurance carriers have a scorecard on your property. Most apartment owners have never seen this. In this video, I'm going to tell you exactly what's on the scorecard and how you can improve your grade before your next insurance renewal. Hey folks, I'm James Jenkins, the founder and CEO of RiskWell. In the last 7 years, our team here has insured more than 100,000 residential units. So what we're talking about in this video is not theory, this is experience from hundreds and hundreds of properties over the last few years. Conventional wisdom for most apartment owners is that your insurance costs are largely determined by two factors. The first is your claims history, and the second is how big and how valuable your property is to replace. The reality is it's a little bit more complicated than that. There are 4 sets of signals. We're going to unpack all of those right now, and then we'll talk about what to do with them after. The first set of signals is property condition. Do you have deferred maintenance? Are you actively getting things done before they break and become a problem? How old is your infrastructure? Your roof, your HVAC, your plumbing, your electrical? Is the paint cracked and peeling? Is there rust on the pool gate? Is there issues with the parking lot striping and painting? Are the sidewalks level or are they cracked? These are the kind of signals that underwriters pay close attention to. The second set of signals is management quality. What kind of inspection checklist do you have? What kind of tenant screening criteria do you have? What kind of signage is around the property, encouraging people to have the right behavior? What kind of lease language do you have around the transfer of liability and expected conduct for people that are on the premises? All of these things are looked at closely by your insurance carrier. They are underwriting the operator of the property, not just the building itself. The third category of signals is the loss run narrative. This is your official loss history for the property. We're not talking just frequency and severity. We're talking about explaining what happened, learning from mistakes, growing and becoming a better risk over time. The narrative around the loss history is a very important signal. And the fourth signal that we're looking at here is simply appetite. Some carriers don't really care about anything you have to say. They don't want to write habitational. They don't want to write residential real estate. So the carrier appetite is going to be guiding a lot of the signals back and forth from what they're looking at. They may be categorically disinterested, or they may be categorically very interested to write a good risk. So what's the playbook? What can you do about it now that we've heard about these signals? The first and most important thing is that you build a 1-page property brief that details all the reasons why your apartment complex is a good risk. Things like inspection checklist, the criteria being used for maintenance timelines, the controls that are in place around the property, how often you guys are taking care of your infrastructure updates. What does it look like when there's a unit turnover, when someone leaves the property? What kind of eyes are being put on the various things that are going to drive claims history? You put that in a 1-page document, call it the property brief, and it gives the underwriters the warm fuzzies of why they should be paying attention to you. Next is getting ahead of loss runs. If you know there's something in your loss history that's going to raise a red flag with the underwriters, get out in front of it. Have a conversation with your agent about describing what happened, why it happened, and what you learned from it, and most importantly, how you're going to make sure or have already made sure that it's unlikely to happen again. Controlling the loss run narrative is a huge part of the playbook. Next is identify the silent killers. If you know something's going to be a problem, get out in front of it. Talk about exactly what your plans are to fix whatever the issue is. If you know your roof is old and needs to be replaced, address that. Have a plan in place. If you have prior history with water claims, tell them exactly what you're doing to make sure that the water heaters don't fail. Those little gaskets down at the bottom don't create a sudden and accidental discharge of water problem, because the most common claim in apartment land is water damage claim. Either someone left the faucet on, a valve in the water heater failed, or something happens around a unit, up in the attic, anything like that. Water damage claims are definitely the biggest silent killer. When you boil it down, it really comes back to the best way to decrease your insurance cost and create better stability over time is to think like an underwriter. Think like how they are going to be viewing your property. What are the conditions of the property? How is it managed? What kind of controls are in place to minimize and decrease and reduce the severity of future claim events? When you're thinking along those lines, you're guaranteed to have a better overall insurance experience. That is how your insurance carrier sees your property. The great thing is you have a lot of authority in what you can do about it. One of the things you may want to do is simply visit below that link and download our one-page checklist for policy renewal readiness. So you can have a simple checklist from start to finish of what your insurance carrier and the marketplace as a whole is going to think about your property and what you can do about it. This is not some sort of sales pitch or backhanded way for me to get your information downloaded without even telling me who you are or where you're coming from. And I'm not going to sell you anything because this is an educational video. If you want to work with us, it's very easy to find us. RiskWell.com, or you can call this number right here, 469-678-8001. Thanks again for watching. I'm James Jenkins. Please remember, life is risky. Risk well.